We've got Nvidia results tomorrow morning at 8:20 a.m. and with AI sentiment teetering at the moment, it could send the market one way or the other. On the positive front, Nvidia's already down 14.5% from the top. So expectations have already come down a little bit. And the company usually communicates very efficiently with the market about what to expect and leave a little bit in the tank so that the numbers are essentially better than expectations and a beat. And with the whole market looking at the Nvidia results, there's a lot of uncertainty about what they'll do. Either way, it's going to clear up some uncertainty, which allows buyers to come back in. There's a lot of negative expectations, and with the glass half empty at the moment on AI, everyone's going to be looking at these results for all the negatives. So if it does survive them, and everyone's expecting negatives, if it does survive them, there is a chance that the AI sentiment will resurrect. And as I say, there shouldn't be any real surprises in the numbers. The other thing to say is that whilst there's been a lot of criticism about circular deals, this will be a tremendous set of results, probably historic in terms of the numbers a company is producing, the biggest company and listed company in the world is producing. So it's really a question of how the herd interprets it. Now, the share price having come back, we're not in an overbought situation technically, which means on the charts, the RSI, which is the relative strength index, which over 70 is overbought. It was 73 and a bit on both the daily and weekly charts, more significant on a weekly chart. And it's come back on a daily chart to 42, on a weekly chart to 53. So we're no longer overbought. So it's technically on the charts not as vulnerable as it has been only 2 or 3 weeks ago during the Nvidia AI Super Bowl, which propelled the share price. The bottom line is that results won't surprise, but the market could take it either way, and it is a big risk for the market. So even if the market likes them or uses this as an excuse to bottom AI sentiment, it's not something we're in cash at the moment. It's not something we want to get in front of because the trend is down, the expectations are extremely high, and whilst it might bottom things, it seems less likely than continuing the downtrend. So we're just going to stay out of the market until this is out of the way. Post Nvidia, there are still other risks ahead. We've got jobs numbers at 12:30 a.m. So Friday morning, delayed jobs numbers in the US. Everyone's expecting this big data dump from the US after the shutdowns ended. So we've got Nvidia results, then we've got a big data dump. We've also got at some point inflation numbers being in that data dump as well as jobs numbers. And after that, we've got this tariff court case, which if they rule tariffs are illegal, is going to kick off Twitter Armageddon from the White House, could create a lot of uncertainty. So various risks ahead. The trend's still down. The technical setup on almost every risk on asset class at the moment, from big tech through to whatever you want, uranium stocks, lithium stocks, the S&P 500, the technical setup on almost every chart at the moment is that we've seen a top and we're coming down. The VIX volatility index is spiking again. All these suggest you this is not a market you want to get involved in, and the Nvidia results tomorrow morning could cut either way. No one in their right mind with this technical setup would bet on them being good for the market, even though they could be. The good news is we're in 100% cash in MT20 portfolio and our newsletter strategy portfolio and in our growth portfolio. Since we cashed up in our growth portfolio, if we hadn't have cashed up, we'd be almost 14% worse off. The tech sector is down 14% from the top now in Australia. So we'll sleep tonight. Markets today, investors will sleep tonight. And we'll just keep making decisions every day as we do, and we'll make another one tomorrow morning.